think it's important to start at the distinction between the near and the long term. And everything we're talking about in terms of this step down is near term, what the Fed is doing. And to put some perspective on that, what caught my attention yesterday was, of course, the balance sheet. The size was a little bit bigger. The minutes suggested that the runoff is going to be a little bit quicker. That was a surprise to the market. The market does not like surprises. And if we step back and think about what the Fed has done over the last few months, it has been a series of surprises. And they've been rooted in a belief that inflation is going hotter and that they need to do more. Their response has been muted. The Fed's response has been muted. And I think that this near term can continue to show downside until the Fed takes stronger action. What we've effectively shifted to is the market is in a near-term game of Fed roulette. This anxiety is the last thing that investors want. And until I think the Fed really makes a strong stance against inflation, I think the market is going to continue to wind down because historically, especially the tech sector, like you said, because these high multiple stocks, historically, the market would suggest ahead of Fed rates, the Fed interest rate increases, there's still an additional 5 to 10% downside to the NASDAQ. And so I just kind of anchor this, think about the near term and think about this anxiety. And I don't think we're done. Maybe the market's up a little bit in the next few days. Maybe it's down. But until investors feel the Fed has a strong handle on this, I think we're going to continue to move lower.
Gene, if you are convinced of that, are you selling stocks right now? Any of these high flyers?
Well, I think you should be most concerned about anything that has high multiples. When I think about FANG has actually hung in there. It's kept these indexes up. FANG is down 12% from its highs. Broader tech indexes that exclude FANG are typically down 30%. And so we see that distinction. So to answer your question, are we selling stocks? We continue to hold Facebook. We think that has some earnings support, has a connection, of course, to the metaverse, which we think is an important theme. We continue to believe strongly in Apple and their earnings power. They also have a play on the metaverse and potentially in the EV space. But there are other companies in FANG that we're more concerned about. Again, this is near term. We're talking about over the next month. That would be companies like Amazon and Netflix. Those two still trade at a 57 multiple. If you look at Apple and Facebook, that's more like a 26 multiple. And so, yes, I think that this is a dose of, I think, should be some conservatism. I think people should adjust the portfolio. When you have a bad day like yesterday, a 2 standard deviation day, you think that it just can't continue. But the reality is that this can continue. I also want to be clear that I think that we will see a rebound. I think once the Fed takes strong control of this, or at least investors have comfort for that, I think you will start to see a rally in some of these tech names kind of in the final 3 quarters of the year.
If you like Meta and Apple and you think that they are going to weather this pretty well, when you see those stocks sell off, do you buy additionally, or is it a little too hot right now all the way around?
I think that in the case of Facebook and Apple, you can buy those today. I think you can buy them on the dips. I think that they can go lower, but I just have conviction that they will ultimately go higher. So I don't want to get too much into the timing of that. But I think if you, again, step back and look at some of the other higher multiple companies, and even these ones that have sold off significantly, some of these high flyers, they can continue to go down. I mean, that's the simple reality of it. Just because things are 50, 60, 70% off their highs doesn't mean that they can continue to go lower. So to answer your question, I think you continue to add to great companies, and I would put Apple and Facebook in that camp. And I think a lot of the other market, I would still be on in a cautionary phase. And I think probably one final thought about how long this can continue. The Fed meeting obviously is coming up at the end of this month. There's a strong case that the Fed doesn't do anything because of Omicron. If that happens, if the Fed basically says we got too much noise around Omicron, I think the market is going to vote basically wrong answer and sell off on that. I think the best thing that can happen for this market is for the Fed to take a really strong, aggressive step, take the Band-Aid off, give visibility to investors, and I think the market will stabilize and start to work better then.